Hey, what's going on, guys? Neil here, bringing you a brand new video. Hope everyone's doing well today. In this video, I'm going to be talking about why the red hot stock market is ripe for a cool down. And I'm going to be going through this article on Yahoo Finance and give you guys some of my opinions. Keep in mind, this is not financial advice, and you should always do your own research when it comes to investing. So, if we jump right into it, we can see that the S&P 500 is up 7.7% this year, and the NASDAQ composite has gained a robust 14.7% this year in the first 5 weeks alone. But full stop, I think you're seeing a classic case of FOMO, which means fear of missing out, infiltrating these markets. What is everyone fearful of? Missing out on the precise moment when the Fed says it'll pause interest rate hikes. So I think everyone's very fearful of not being fully invested when the Fed kind of flips and says, hey, I'm going to pause interest rate hikes. So this is a market pricing in the end of rate hikes for this cycle. And dare I say, pricing in rate cuts at some point later in 2023. And this FOMO has built on itself since the middle of January. I completely agree. I believe that this market is pricing in rate cuts for later on in the cycle. And it's going to be interesting to see if we see some follow through. Corporate fundamentals just don't appear to warrant this upward thrust in the markets. Per FactSet data, 70% of the S&P 500 companies have reported positive EPS surprise for the fourth quarter, which is below the 5-year average of 77%. So that is positive. S&P 500 companies are beating EPS estimates for the fourth quarter by 0.6% in aggregate. So it's a little bit shy of the 5-year average. And listen to this one. Fourth quarter earnings are tracking down about 5.3%. Yes, down. So companies like Apple, Alphabet, right? They're missing on earnings, right? Even Starbucks, right, talks about disinflation. And I think to sum it all up, the most important thing that we can get from this article is that if we look at the market pricing this year, it's not even pricing in a soft landing. It's pricing in complete takeoff, right? Complete moon. It's pricing inflation to come down. It's pricing growth to avoid a recession altogether. It's pricing in central banks cutting rates starting mid this year. So that is really markets are priced for perfection. BlackRock Global Chief Investment Strategist Wade Lee said. So I completely agree with him here because seeing the S&P up almost 8% and the NASDAQ up 15%, that's a crazy move within 5 weeks. And fundamentally, just because we had a decent jobs report and maybe some half-decent earnings, nothing has really changed to give everyone the green light. I think people are just pricing in rate cuts and just hoping for the best later this year. But we'll see what actually happens, right? In the near term, beyond FOMO and chasing momentum, it's hard to see a fundamental reason for stocks to keep pushing higher. So, like I said, I think he's spot on. I think it's growing more dangerous by the day to be in this market. Obviously, if you're a long-term investor, don't fear, right? Just have a strategy and make sure you're dollar cost averaging, but make sure maybe you're buying more heavily on the dips, right? Than buying when the stock is up a ton, right? So if we look at the S&P here from the beginning of January up until right now, we're sitting at about a 9% gain, maybe a little bit lower at this pre-market level right here, right? So if we take it from here and we hold down shift, we take it from here all the way up to the pre-market level, we're still up about 8%, right? So that's a massive gain in the beginning of the year just for the S&P 500 alone. So it's really going to be interesting to see if we can hold these levels and push higher, or are we going to kind of dump back down maybe to potentially even new lows in this 350 level. Personally, I think that the market is just pricing in everything and people are being way too optimistic and hoping for the best. Hopefully, Fed will cut rates. Hopefully inflation will taper off, but no one really knows what's going to happen, right? We're just pricing in a ton of things. And I think FOMO is playing a huge part in this market, as it does in a lot of markets. I think it's extremely important to understand how narratives play a role in markets and to understand that fundamentals and earnings are not the only things that can move stocks, right? There's tons of things like supply and demand and things that happen in between the 3 months of earnings, right, that push stocks up and down. So I hope you guys enjoyed this video and I hope you guys are coming up with a plan for investing. If you guys like this type of content, let me know by liking, commenting, and subscribing with the notification bell turned on. And I hope you guys have a great rest of your day. Thanks.